so let's take ASO, and I just want to talk about like what makes a good money press? Why are we getting into this chart? Why now? Well, first off the bat, what you want to think about when you're looking at finding new money presses is you're looking for a calm, controlled, bullish trending chart. That's the sentence you want to think about. Calm, we've got low volatility, controlled, good support resistance lines, and then bullish trend, obviously it's moving up. This money press is a bullish trade, we got to keep moving up. So here, this is kind of the picture perfect chart. Now, we're not going to see a lot of charts like this because market correction and volatility and all of that, but this is a good just gold standard for us to focus in on and take it from there. Now, first things first, bullish trend. I want to be lifting from left to right going up just for the whole year, ideally. If we can have the entire year moving up, that's great. But like Spotify is one that Preston got into recently that I do really like. It's okay if we have dips or things. The focus is that we're higher now than where we were a year ago, right? So we're at a higher pace than we were a year ago. So it's showing us that whatever pullbacks the stock has been through, it's still okay. It's still a bullish trade. They worked through it. They got to a better place, and now we're moving forward. So we want to be higher than a year ago, ideally, but there are going to be stocks that are lower than a year ago, and that's okay. Like Amazon, for example. Now, if we're going to be lower than a year ago, we have to focus in on a couple things. It's got to prove itself a little bit more. If the stock's been going up for the last year, then it doesn't have anything to prove. But if we've been going down and we're working our way back up, then we got to have a little extra to make sure it's ready to go and not just going to keep going down. So a big thing for me is we have to create a base. We have to create a strong support line to work off of. Now, how do I draw these supports? You'll notice that I have all these white lines on my charts, and they're all horizontal. So there's many ways to draw support resistance lines, but I focus in on just the horizontal lines for the price points. And what I'm doing is I'm connecting pivot points together. So for example, see how we came down to here and we bounced, and then we came down to that same spot and we bounced. So because we have those two pivot points, I can draw a line right all the way through, right? Same thing here. Let me just remove these. One of these days, I'm going to figure out how to do more of a pen drawing on here. But like, for example, here, see how we came up to this and we came down. And then we came up as well to that same point and we came down. And then we actually use that as a support and we bounced. So we've got this trend that I'm drawing a line all the way through to be able to work with. And with these ones, I'm trying to draw long-term trends. So that means the furthest left and the furthest right is going to cover a month or more time. We're not doing day trades or swing trades or little things like that. We're looking for big overall spaces with this. So again, ideally, so keeping with that, we want to have that base. So we did create a base here, which is good. And we need that because any trade we get into has to have a support. It has to have a level where we decide this is when we're going to get out. Because if we get in and there's no exit strategy, then how do we know if the stock's dropping, if it's a good thing or a bad thing? Stocks are going to always move around. They're going to go up and down. And we don't want to just jump out every time it drops. But we got to have a line in the sand to say, at this point in time, it's now dropping way too much and I got to get out. So this is that support line for us. I call it the hell in a handbasket line, which is our exit strategy. So we have to have a line to work with. And then from there, we have to be pushing forward. We got to be lifting. So I say it's got to be a base and a lift. The base has to be the support line that we're going off of. And then the lift is the pushing forward. Now, something you really want to focus on with these money presses is go for consistency, not opportunity. What that means is we're looking for things that have already been going for a while, not something that's just happening. So instead of saying, hey, the stock just dropped down to a low and I think it's going to bounce, let's get in, instead wait for it to go up. Say, hey, it dropped down to a low. I am going to wait and see where it's going over a couple of weeks. And if it's moving where I want, then I'm going to jump in. But also I should say that for the money press, we're not buying low, selling high. We're really buying high, selling higher with these things. So, good, we've got that. So again, when we have these stocks that are lower than a year ago, we need to have a base and a lift. But if we have a stock like an ASO that has just a lift all the way up and it's going, it doesn't need to prove itself. It's already done that. It's already working just fine. The next thing that we think about, let's read through some of the comments Ron, I'm sorry, I'm not sure. It's saying something about the audio is breaking up. I'm not seeing that from other people on there, so I apologize if maybe log back out and log back in. Someone was asking about beta as far as a chart for volatility. So I'm going to get into volatility in a second with that. Yeah, some other people said audio is fine, so I apologize for that, Ron. So the beta, I don't use beta, but beta is perfectly fine to use. Actually, we'll just talk about that now. So we've got the bullish trending chart that we're going for. Then we also want to have low volatility. So that's part of the calm, controlled bullish trend. We want a calm chart. So the calmer it is, the easier it is to trade, right? We don't have to deal with all these swings up and down and all over the place. So we want to have those lower volatility stocks. That being said, the market is volatile and right now, and we know that as the market goes, so does the stock. So when we think about volatility, it should be relative to the market. So what I mean by that is, let's pull up the S&P 500. So this is the S&P 500. Ignore this big straight line through here because that's just a glitch on Thinkorswim that I can't get off. But see how the market has been swinging. Think of it like you're looking out at the ocean, trying to see how choppy the waves are, right? We've got a medium wave there. We've got a really big wave right there. We got a medium wave there, medium wave. So we've got some movement happening, right? If we go over to like ASO, right off the bat, you can tell that's a lot less volatile than the market, just super easy. We just want to get into those things that have lower swings. If I look at, say, BABA, okay, this one's more volatile. So you'd have these big swings up and big swings up. Lower volatility is easier to trade, but there's a little bit of a trade-off. Sometimes lower volatility comes with less premiums. So you kind of have to figure that out. And we'll talk about premiums in just a second and how to compare those. But we want the calm, we want the bullish trend, and now for the controlled part. So the controlled is that we've got to have good support and resistance lines. And again, we're drawing these lines, see like this line, for example, see how we come down to this point and we bounce up, we come back down again and we bounce back up. So I'm drawing a line through there, right? Or here, we've got this line coming up here and we're pulling back. We got this next one here. These points don't have to be consecutive. See how I have these 2 points connecting, but it's going through a bunch of stuff? That's okay. One person, a client of mine, actually, what he did is printed out the charts and he took a ruler and he took the ruler at the top of the page and just worked his way down. And anytime that there were points, he would just draw a line right through and keep going. So when you're doing this, kind of try to think about it with that as well. So support resistance lines are key. They're giving us predictability. They're telling us, do we expect the stock is going to keep going in the same direction? Is everyone on the same page? Without the support resistance lines, it's telling us that everyone's just doing their own thing, going around, and it's very difficult to trade. So when we have a stock that over the whole year has good support and resistance lines, then that's really easy for us to work with. We know that people are looking at the same things, they're buying at the same points, they're selling at the same points. So the more lines that can be drawn, and the lines that can be drawn over the entire year, the easier it is to work with. AMAT is a trade that's been really difficult to work with because if we look at this, I can only draw one support line right here, one trend line. And even then, we've been channeling around that trend line. It's been really difficult overall. So when you're getting into a trade, know that the stock's telling you its personality before you enter. When you're looking at something and going backwards over the last year, it's showing you, I'm a volatile trade, or I'm not a predictable trade, or things like that. So when you enter in, we don't want to expect that something's going to change after we want to see the change happen. We want to see it move. So like AMAT is kind of a rough trade to go over. Even though it's a bullish trend, it's been a hard one. So again, calm, controlled, bullish trending chart when you're looking at these things.